how to get meaningful and accurate results from the HomeSelect simulator. Like any other technology, garbage in, garbage out. So it's imperative that you put good data in so we can determine how powerful this loan will work for you. It's not for everyone. You have to qualify. You may not qualify. But when you go to HomeSelectChallenge.com, you'll find links to this page, or you can go to GoHomeSelect.com and get directly to this page. First thing you'll do is you'll notice that the front page has a lot of germane information about the loan amounts and loan qualifications, etc. You can access the simulator here, or just simply scroll to the bottom of the page. At the bottom of the page, the first thing you're going to do is you're going to start a new simulation. If you've done this exercise before, you'll notice here you can enter the code from the report. The report will have your specific code listed right here. So we're going to pick a new simulation. We're going to hit go. We are going to do, really the results for all of these will be the same. So I just use purchase for everything. It's comparing a new loan to a new loan. Home Select versus a 30-year traditional, which is what most people are financing their houses. But you have the option to pick a different type of product like a 15-year if that's what you're comparing. So again, we're going to go to occupancy. You're going to pick the primary residence. Texas Homestead is not available yet. That is yet to be released. If it's a second home or investment property, obviously you'll pick the appropriate choice. For most people, it's the primary residence. We're going to pick the all-in-one versus a traditional. And we're going to pick the 1 month adjustable most likely, because right now we expect rates to drop for the next 2 years. So why would you lock in when the market is high when we can let this loan automatically slowly float down to the bottom, which we anticipate over the next couple of years? Not a crystal ball. We can't guarantee that, but obviously we hope that's what's going to happen. Intellectually, we know that there's no reason for rates to be higher than they were pre-COVID, short of the Fed messing around with rates when we had COVID, so the markets didn't crash, and now they're trying to unring that bell and turn a super tanker of an economy by raising rates. So that's my spiel about rates in a nutshell. Anyways, onward we go. So estimated home value, pretty straightforward. For this exercise, we're going to say $800,000, and we're going to say a $640,000 loan amount, which is 80%. You might have 20% down, or you might have 20% equity in the property. But again, use the accurate numbers there. You can go up to 90% of the value. If you're trying to go over 90%, it will go tilt and will not work. Comparison loan. Again, here's where you can choose what type of loan you're comparing it to. We're comparing it to 30-year mortgages. And let's say it's a 7.5% rate right now that you're being quoted for maybe a cash out deal or just a purchase, whatever it may be. This page right here is if you have any extra payments that you have to make on the loan. If you have a second mortgage, you can click this tab right here and add the second mortgage data. We're going to move forward. This page, you'll notice it's labeled deposits. This means net money hitting your checking account every month. Not gross, not what you get paid, but what you take home after taxes, insurances, maybe funding your 401k. You can also play with this about what if I stop, my employer may not be matching my 401k anymore. What happens if I simply move my 401k money to this? And you can compare what happens to the payoff and how quickly you might retire that debt if you did so. So let's say for this exercise, the household is bringing in $4,000 a month in net deposits, and let's say they're doing that weekly. You can choose here again, monthly, quarterly, annually, whatever it may be. Everyone's got a different deal. Any one-time deposits. This is, let's say you're expecting an inheritance, or you're going to sell a rental property you have and take the $100,000 out of that and put it into this loan. You can put the $100,000 here, and what month out of 360 would you be paying down that principal? So we're assuming that this household has $17,000 and change hitting their accounts monthly, about $208 a year. Next page. This is important. This is the spending of the household. And again, you may not qualify. Not everyone does. This is for sophisticated borrowers who have more money than month, conservative borrowers. If you are spending everything you are making and you can't spend it fast enough kind of thing, this loan is probably not for you. We have other products that I can help you with. But for this particular scenario, let's say they, after their house, they have 4,500 for the principal and interest, another $1,000 in change for taxes and insurances. Now, if that number is wrong, some states have much lower taxes, like Hawaii, and others have very, very high personal property taxes, like maybe New Jersey, Connecticut, etc. You can adjust the numbers here as you see fit. And then what we're going to do is we're going to use these toggles here on percentage left over, and you'll watch this number here. So a lot of times clients will say, oh, I've got 5,000 left over at the end of the month. I can just toggle up. Or they might say, okay, I save typically 30%. Again, toggle up or down to get to a reasonable number. We're assuming then that this client, this household is spending $4,500 on the principal and interest, $1,000 on taxes and insurances, and another $6,600 on whatever is left over. Groceries, entertainment, maybe cars, schooling, whatever it may be, other loans on credit card payments, whatever it may be. And that they have roughly $5,200 left over. And we're going to hit calculate. It's that simple. And this is going to tell you how many years it's going to take you to pay off the loan versus a 30-year, what the total interest charge. You'll notice that we have a huge differential here based on interest charges, based on utilizing this loan product. And we're saving the client $724,000 over a 30-year amortizing loan, and you're only going to make 91 payments instead of 360. Now, the great thing about this loan is when this is all done, not only does this client have their house free and clear in 7 years, but they have a $640,000 line of credit that's free and clear as well to use as they see fit. So pretty amazing stuff. Pay down summary is a great tab. This will show you the metrics for what the minimum payment is based on interest only versus what they have to pay on a 30-year amortizing loan, how fast we're paying down principal, what percentage of principal is being paid down annually. This is a shocking number right here. This is the comparison loan effective APR, and we're paying basically 2.3% versus a person in a 30-year amortizing loan is paying 7.5%, assuming fees are equal, and we're comparing apples to apples. Staggering results. So one of the other tabs that's pretty great to look at is this pay down table. This will show you exactly, like for example, in 24 months, if I've made 24 months payments based on what I've told the simulator, I'll have paid down $132,000 in principal already, meaning I have $132,000 in equity on top of the 20% equity that we started with without counting appreciation, right? And the 30-year amortizing loan is only paid down $12,000. Staggering numbers. So you look at, let's say, 48 months. Nearly $300,000 versus not even $30,000 yet. An amazingly powerful loan for sophisticated, conservative borrowers. This loan is completely disruptive, and it's a new program. It's 20 years old versus the 30-year amortizing loan, which was created in the 1930s. It's old technology. This is cutting-edge stuff. This is a disruptive mortgage that the banks don't want you to know about because they lose that difference in interest. So this money that is saved would normally go to the bank as profit. So we're sheltering the client from giving the bank an extra $725,000. Powerful. So I encourage you to get good results. There's also on the HomeSelect Challenge page, HomeSelectChallenge.com, a step-by-step, screen-by-screen description of how to get meaningful results as well. Good luck. Feel free to reach out to me, Doug Waldman, the HomeSelect Savant, at Geneva Financial. If you've got any questions, 805-231-1644, license 248175. I'm here to help any way I can.